Good morning to you all, good evening or good afternoon, depending on where you are in the world. It is Saturday. I am sorry that I can't join you live, but I'm about to fly off again, so I don't seem to be off the plane at the minute. Um, so I am going to just give you a little review. The market will be exactly the same today as it will be tomorrow, but I want to give you a little bit of review of what I'm looking at and why. So let's have a look at. Firstly, some interesting data point, or an interesting data point here, which is to do with the 10-year yield of many of these markets. So what I've done is I've just collated some information about the major currencies and their 10-year bond yields, just sort of see what the bond market is believing and thinking about this current market. Over here, I've just put the number of the actual bond yield, the 10-year bond yield, and this is the current interest rate for each of these markets. Now we're looking at the US here. So the bond yield is 4.596, so practically 4.6%, but you can see that this has really started to aggressively rise. And just like any other market, you can put trend lines on a bond yield, and we can see just from this trend line here that it was in this kind of this trading range, kind of going in here. Sorry, it was white. Is in this trading range here, and we've started to burst through that over the last few sessions. So we are really kind of suggesting the bond market is suggesting that inflation is going to pick up. Now, the last time that we were near these levels, we see down here that that was back in 2023, that we were approaching the levels that we're seeing now, and also in 2006 was another point that we kind of see bond yields kind of going up and starting to kind of increase in their velocity of the gaining of price. So 4.96 for the US with an interest rate of 3.75, which suggests the interest rate is too low. The bond market believes that the interest rate should probably be closer to 4.5, maybe 4.25. So a little bit low for the US. Moving on to the Aussie, again, another break to the upside. This one looks a little bit different because the Aussie actually, the bond market is really starting to suggest that we are higher than we were back in 2023. The interest rate should be higher. Again, a little bit lower. So 4.35% is the interest rate with the bond yield at nearly 5. So it's still got 0.65%. Now, still lower, but the differential between the bond yield and the interest rate is a lot tighter when we look at the Aussie interest rate versus the bond yield. This is where it starts to get interesting. The UK interest rate at 3.75 and the bond yield at 5. So now we're looking at a 1.25%, so 1.25% below where the bond market believe the UK inflation rate is probably sort of going to have to push the interest rate from the Bank of England. And again, above the 2003 level, approaching the 2007 level here, 2006, 2007 level here. So intimating that not only is inflation picking up, which we know it's picking up right across the board, we're really starting to see inflation numbers start to filter through after the conflict in the Middle East just wasn't able to get resolved. So the oil prices are pushing the inflation higher. We see the natural gas prices are also pushing inflation. So inflation is increasing. The bond market is suggesting that the UK inflation interest rate is too low by 1.25%, which on the face of it kind of favours the pound, certainly against the Aussie, because they've already moved. But we'll have a look at maybe one of the reasons that the pound could be one to avoid for right now. The Canadian bond yield at 3.7, let's call it, with an interest rate of 2.25. So again, around about 1.5 in this situation, or certainly sort of 1.25% too low. So the bond market is expecting a hike from the Bank of Canada. The German Bund. Now, the German Bund is the bond we have to look at when we're looking at the Eurozone, because the Eurozone doesn't actually issue a bond itself. So we look at the German Bund, and we're looking at 3% for that, 3.1, but 3% with an interest rate of 2.1. So if you compare this, the euro interest rate is around about 1% below where the bond market believes it should be. And if you compare that to the likes of the UK at 1.25%, it would favour the UK and it would favour the pound very slightly at this particular stage. And this is really the stark one. 2.7% is the 10-year bond yield from the yen, with a interest rate at 0.75. So we are looking at almost a 2% gap between the bond yield and the interest rate. That in itself is a stark message to suggest that if we aren't already long yen, then we should certainly be considering the Japanese yen over the coming months, maybe possibly weeks, but certainly over the coming months. The Japanese yen is the currency according to this particular metric that we should definitely be looking at. So the bond market, it tends to be pretty clever. Is sending the message that the interest rate is way too low from the Bank of Japan. Kiwi again too low, 4.76% where the bond deal is 10-year bond, and the interest rate at 2.25%. So another one which is over 2% difference between the interest rate and the bond yields. And the RBNZ have not yet really started to move in the same way that the RBA in Australia has moved. And because they're in similar parts of the world, you would assume that the inflation issue and the inflation situation will be relatively similar for those two economies. The question of whether they are strong enough to raise interest rates is the question. Is one of the things to muse over. But this really does suggest that the Kiwi and the yen, according to this metric, are the two currencies that are worth looking at to buy. Interest rate at 0 for Switzerland, with a bond yield at 0.5. So again, I mean, you see the huge difference down here. You know, the way that the bond market is kind of like looking at the inflation issue in Switzerland, nowhere near as bad as we've seen with the other currencies. So this has really been relatively flat for some time, and it's still kind of within a trading range as well. So the Swissy kind of comes up as a possible one to look for a selling opportunity as well. So we're looking at the yen for a long, the Kiwi for a long, the Swissy potentially for a short, and the pound would be a long, but we've got to be a little bit more careful with that, and the CAD as well. So looking at the Market Made Clear website now, just to check out our seasonals and see if that what's lining up with the seasonals, and what that suggests about what we can actually look for next week. What we can see is the Aussie now has started. Now it was going up and up and up and up, while the inflation rate here. So this is the inflation, sorry, the seasonal pattern here on the orange line, and this was starting to come down while the price, the yellow line, was continuing to rip higher. All of a sudden, at the end of last week, this thing just turned, and the Australian dollar being associated with risk, and the risk in the market is obviously kind of like pretty stark. And maybe not changing. And also the RBA have moved on interest rates, where the others maybe there's a suggestion that they're going to be starting to move as well. So we're starting to see the Aussie move in tandem with its seasonal outlook. And what we got here is a potential kind of seasonal low in around about the 25th of May. So next week would suggest some weakness from the Aussie. Let's have a look at the pound. This, what's it going to be down as? Maybe United Kingdom. Let's have a look. Probably down as the British pound, I would suspect. Here we go, British pound sterling. British pound sterling suggests that there is a seasonal long coming into play on the 19th. So it's currently the 16th. So really looking into next week, there is a suggestion of a seasonal long. Huge move down at the end of last week, breaking through some lows. We'll have a look at the price chart in a moment. But this price action definitely suggests that that the pound is going to struggle for a particular for a potential uptrend. But there may well be a bounce back early doors into next week. So we'll have a look at that. Canadian dollar. Which we'll put in here. Looks like that one's about to kind of like, possibly start to get a bit of a turn as well. All of these are against the US dollar. So even though we're starting to see a decline in a lot of these, we can start to kind of think about, well, what may be, the strongest one going into next week. Certainly the pound and the Canadian dollar look like further upside, with the Aussie looking for a seasonal short. We'll look at the euro as well. Again, another one that's looking like it could be potentially hitting a bottom as we approach next week, and certainly sort of like towards the end of May, it tends to have a bit of a rally right the way up until August. So euro is another one that's relatively positive. Now, the one we really want to see is the Japanese yen. Now, if we can get a seasonal pattern, or if there is a seasonal pattern looking for a long, then there may well be some traders coming in who are suggesting and may well want to take this one on board. Now, we can see the seasonal low tends to happen around about June. So it might be that we've got another week where we're waiting on the yen, but the market made a definite move next week. So the carrions will be circling around the Japanese yen for a potential long, and that long tends to come in June, but we are going to be in a week of a little bit of stickiness until a bit of a decline in June in May, if we follow the seasonal pattern. You can see it's been pretty good. Downside here, then there was that rally, nearly coincided with its seasonal pattern. Then there was the high, came down, small rally, comes down, another rally. So this is pretty close to its seasonal moves here. So looking around about the last week of May, looking about the starting of June, looks like the right timing for the Japanese yen. Whether we can wait that long before the price starts to move is yet to be seen, but it's certainly the one on our list. Switzerland next, and the Swiss franc is looking for a seasonal low around about May the 19th. So if you look at the bond market, suggesting that the Swiss National Bank maybe won't be raising interest rates quite as aggressively as the others, it would seem like the Swissy could be one to go short. The Swissy does have a slightly different dynamic, and the lack of inflation kind of pushes the Swiss economy into a much more comfortable position. Nobody wants to see hyperinflation. That kind of weaken economy quite quickly. So it might be that we have to take the short narrative from the Swissy with a pinch of salt, maybe sort of flattening off. Certainly, short Swiss yen is okay, but against some of the others, maybe a little bit more tricky. So let's have a look at the New Zealand dollar to finalize this, and then we'll just check the. Now, the New Zealand dollar also tends to rally next week. Now, this one so far is lining up the best with what the bond market is suggesting. So the bond market is suggesting a long, and we have a seasonal pattern which suggests a long around about the 19th of May. So the Kiwi dollar would be certainly at the top of the list when we look at the two metrics that we've looked at. Now I'm just going to have a look at the dollar index. Let's see if that's in. Here we go. So this is the US dollar, and the US dollar has already started to kind of like rip to the upside. But look what happens. US dollar actually starts a little bit of a decline in going into June, takes a little bit more upside, but really doesn't really start to genuinely rally until August. So the US dollar could be one that's under pressure next week. So let's finally have a look at the chart and see whether the long for the yen suggested and the long for the Kiwi actually shape up, and how that looks. So if we just have a look at everything again against the dollar, we have seen this decline with the Aussie. This is a weekly chart, so big move to the downside. Pretty much all happened on Friday, just a big flush out. So going into next week, even a relief will probably get sold off. So the Aussie's looking pretty negative. The pound is pretty bad as well. It's pretty stark. Even though what we did see really sort of like for the pound was some evidence that the bond market is suggesting that they're going to be, the BOE are going to raise interest rates. So they could raise interest rates, but it might still be problematic for the pound. And I said that I would talk about why. The UK is in a bit of a political upheaval because the leader, Keir Starmer, is now under pressure, and the main contender appears to be a man called Andy Burnham, who's quite popular. And even though he's not a member of parliament yet, he has been passed to go and stand as a member of parliament. So if he does, I think some uncertainty around the pound could well filter through. So this may not be quite as attractive to trade, even though we'd be looking for upside. It might not be quite as attractive to look for. The pound versus the dollar versus the CAD. We can see that bottoming out here. The Canadian dollar will be subject to what's going on in the Middle East, and it might be a very good candidate to sell if there is a resolution. Now, we haven't really seen the CAD have huge amounts of strength, and that may well come if there's no resolution. But people are expecting a resolution, and I think the clock is well and truly on the side of a resolution as inflation starts to really kind of hit the globe. So the CAD may well be one for some downside. This is the euro, again similar to the pound, where we see that this one coming down. The bond yield was suggesting that this one's nowhere near as badly under pressure. The US dollar versus the yen. Now this one did see some upside, but this is a big move down. This is a move up, and that looks to me like a retest. So dollar yen looks like a potential short going into next week. This is a weekly bar, so it might sort of like ease higher first, but it certainly looks like it's under pressure. And we will now have a look at the Kiwi. This is the one also that we want along, possibly that we're kind of seeing here that there is there's a bit of a low there, so it might be that we've just sort of like managed to kind of create a higher low. And sorry, here with this might well create a higher low. So that's one to watch out for. And finally, the dollar Swiss, which is always going to be a tricky one. So dollar Swiss has also started to move higher, kind of a hint of an inverted head and shoulders there. So putting that all together, that would suggest that we could look for possible Kiwi CAD short, Kiwi CAD long, and CAD yen short. So let's have a look at the CAD yen first. CAD yen, definitely some bearish price action going along here. Don't think it managed to get through this. Oh, it might have. Yeah, look at that. It's right through the trend line there. So the CAD yen is certainly kind of at the top of my list for a potential short. The timing is going to be important because of the swaps that need to be paid, but this one would be at the top of the list for a potential short. We've seen the bond market suggest that the yields are going to be putting pressure on the BOJ to raise interest rates, and that is often a bullish signal. We can see that the seasonal correlation is just about a week away, so it might be just one more week where this kind of like messes around here. But I'm going to look for sell signals from next week and see if that just slightly front runs the correlation, and then see if we can get the Middle East situation sorted out. So CAD yen short is one, and let's have a look at the Kiwi CAD as well for a long. Kiwi CAD for a long, big move to the upside and a big sort of like shove back down again. The trend line has been pierced back again. So this would probably need to get back above that, so that particular level around about the 0.880, 0.808, sorry, for me to continue my interest, but because it's under the trend line. But this still looks of interest to me. I'd still be kind of watching this one relatively closely. It might be the trend lines there. This is still one I'll be watching closely for an up for a long, but that doesn't look as good. So really settling down, the main one for me would be the CAD yen for a short. And looking into the daily bars, you can actually see that there is possibly even a lower high here already in play. Um, Stops at the highs are okay because there is a long way for this to drop if this is to fall. So even on a monthly time frame with a 200 pip stop loss, there's still a long way for it to come down to that point. So there's possibly a 6 to 1 without the swaps taking the swaps out of the equation. There's a potential 6 to 1 to the downside here. So CAD yen is the one to watch, and I think trading it on longer term timeframes might be a safer play initially, and then seeing whether there might even be a more clear signal, and then tighten the stops up and see if the position can be added to. So there's the weekly Sunday update for you guys. I hope you have a fantastic week and going into the end of the month, and that the volatile situation that we've seen over the last towards the end of last week hasn't put anybody off too much. This is markets. This is what they do. So you just got to kind of get your heads back together, get your research done, make some good decisions, and everything will be all right. All right. I'll see you all very soon.